Hi, my name is Allan Madan from Madan Chartered Accountant.
And I'm Sandy. And in this video, we're going to be looking at the quick method of accounting for HST. This is part one of a two-part series. Hi there. In today's video lesson, we're going to be looking at the HST quick method of accounting for HST remittance. Now, this is a very simplified way of figuring out how much HST you have to remit to the government. If you're a small business owner or a sole proprietor, this is going to be very beneficial for you because it's going to show you exactly what you can do to save a lot of time and hassle figuring out how much HST you have to give the government. Now, in order to be eligible for this method of accounting, you have to make sure your total revenue does not exceed $200,000 and you're not a person listed under the exceptions list. The exceptions list is available in full detail on the Canada Revenue Agency website. What I have over here is a very simplified list. Now, as you can see from this list, if you're an accountant, financial consultant, lawyer, actuary, notaries, listed financial institution, or anybody that works for the government, health industry, or you're a charity or an MPO with at least 40% of your funding coming from the government, you're not going to be able to use the quick method of accounting, unfortunately. However, if you're not, you can use this quick method of accounting if you meet the other criteria. Now, how do you elect to use this method if you're eligible? Simply write a letter to the Canada Revenue Agency explaining your election by the first day of the next fiscal quarter. What that means basically, for example, is if you want to use the quick method of accounting for your December 31st, 2011 fiscal quarter, then you'd have to make sure you write a letter to the Canada Revenue Agency by January 1st, 2012. A simple rule of thumb for most small business owners is that if you want to use the quick method of accounting for the entire year, I would highly recommend making sure the Canada Revenue Agency gets the letter by the 28th of the year you want to use it for. How does the quick method of accounting work? It's very simple. All you do is collect 13% from your customers normally, and then you only remit 8.8% to the Canada Revenue Agency after applying a 1% credit for the first $30,000 in sales. Everything else you keep, and that is the amount you don't have to remit to the government. Now, in order to walk you through the entire process, I have our fictional client here, Bob, who runs a small auto repair shop, and he has $100,000 in sales for 2011. He's elected to use the quick method of accounting for the entire year, and we know his HST is $13,000. Now, from this chart over here, we can see the calculation being done. Total sales for the year, including HST, equal $113,000. We multiply that by the eligible rate of 8.8%, which gives us the quick method HST, which is $9,944. However, this is not the amount we remit, because we also have the 1% deduction on the first $30,000 of sales. In this case, the amount of HST we have to remit is $9,644. Everything else, Bob will get to keep. Now, in the next video, I'm going to be showing you how to actually go about putting this on the HST return.
Thanks for watching the video, how to calculate HST. I hope you're going to save a lot of money with it. For more great tips and tricks, please visit our blog and get access to your free report, 20 Tax Secrets on How to Beat the Taxman. The links for which are shown at the end of this video. Thanks again for watching. See you next time.